this on the euro dollar is that if this doesn't follow through, and it doesn't look like it's following through, then I am prepared for more shorts. But I'm not basing my decision on price action. There's no way I'm basing my decision on price action. No. I'm basing my decision on news, right? Oh, Chris has got thingied. Right, so I'm basing my decision on the news. So this is the latest article on Bloomberg. So this came out, I think, maybe about maybe about an hour ago, and it's quite interesting. So it says the Fed keeps zero rate outlook, sees inflation bump short-lived. Yeah. So it says central bank sees inflation settling back after jump this year. 7 officials see higher rates in 2023, up from 5 before. So higher rates, yeah, in 2023 means that in 2023, by 2023 or into 2023, they should want to hike rates. So they're looking all 2 years into the future, right? So let's actually, matter of fact, let me play this article and we can kind of dissect this. So rather than looking to follow price, yeah, this could just be, which I think it is, obviously I could be wrong, but if price doesn't follow through, it will have all of the hallmarks of getting people and getting traders to FOMO in. And this is what Mark was saying, FOMO, because all they do, and how, you know, if you still trade like this, basically not what I'm talking about, where you see a massive candle, then you feel that you're going to miss out because, you know, price should end up going higher, right? There's momentum there. There's prices are following through. But again, the question is, why is prices following through? Did the Fed say something out of the ordinary? Did they say something that should weaken the dollar? Yeah, this has to be the question. Why are you buying? This is why I can never subscribe, ever subscribe to just technical analysis alone. It just doesn't make any sense to me. But yeah, let's basically break down this article now. Yeah, so you know, I've kind of skimmed this, so I know kind of roughly what's in it. But I thought I'd leave it for our group call. So let me know if you guys can hear it as well. By the way, I'll pause it for a sec. So,
Fed keeps zero rate outlook, sees inflation bump short-lived.
Can you guys hear that? Yep. All right, cool. So let's go through it now.
Federal Reserve officials continue to project near zero interest rates at least through 2023, despite upgrading their U.S. economic outlook and the mounting inflation worries in financial markets.
Right. So for me, that is still positive, right? So yes, they're continuing to project near zero interest rates. So at the moment, I think we're at 0.25 or something like that. Is 0.25 the economic data interest rate? The US, yeah, 0.25, right? So they're basically near zero, and so they're just basically saying, you know, that interest rates are probably going to stay there, yeah, because remember, inflation is rising or supposedly rising, so they're not going to be cutting rates, not at all. Yeah, but also as well, it says despite upgrading their US economic outlook and the mounting inflation worries in financial markets. Yeah, so there's inflation worries, meaning inflation might, you know, get out of hand, going beyond, you know, their usual 2% target. So it's still looking positive. Does everyone understand this, by the way? Yeah. If you don't understand, let me know. If you don't understand, let me know. Yeah. I'll take your silence for everybody is understanding what I'm saying. Yeah. Okay, cool. So everyone understands why that isn't negative. In fact, that's probably a bit more hawkish, not necessarily in their language, but it's positive for the dollar, right? It's definitely positive for the dollar, especially when you compare it to what Europe is saying in the ECB. Anyways, let's continue.
The decision, which came on a volatile day for investors with Treasury yields surging ahead of the announcement, masked a growing number of officials who saw liftoff before then, though Chair Jerome Powell stressed this was a minority view. The strong bulk of the committee is not showing a rate increase during this forecast period, Powell told a virtual press conference Wednesday following the decision, adding that the time to talk about reducing the central bank's asset purchases was not yet. 7 of 18 of...
So they're basically just saying, look, we're just in a wait and see. We're not reducing asset purchases. What is asset purchases? Is basically bond buying. So at the moment, they're buying a certain amount of bonds. I can't remember exactly how much billions it is, but they're buying bonds to support the market and buying basically the government debt. Now, a reduction in asset purchases will be positive again, dollar, because they don't necessarily have to print so much. They don't have to expand their balance sheet. They have to print so much to buy, you know, government debt, meaning that the dollar should want to strengthen. So what they're saying is that they're saying, adding that the time to talk about reducing the central bank's asset purchases was not yet. So they will be in the future, because remember, we're always future thinking. Yeah, always thinking of the future. We're not reacting. We're trying to, be proactive. Yeah, so that it's just not yet. Yeah, but it's on the horizon. So they're talking about reduction. The thing is, they're not talking about increasing asset purchases, are they? This is how we have to think. They're not thinking about that. The conversation is a reduction in asset purchases, and it's just not yet. So again, more positive dollar news. Yeah.
Officials predicted higher rates by the end of 2023 compared with 5 of 17 at the December meeting, showing a slightly larger group who see an earlier start than peers to the withdrawal of ultra-easy monetary policy, according to the Federal Open Market Committee quarterly economic projections issued alongside its policy statement.
Right. Just quickly, I don't want to keep pausing it after every single paragraph, but just quickly, it says 7 of 8 of 18 officials predicted higher rates by the end of 2023, compared with 5 of 17 at the December meeting. So that's basically more of the Fed officials are seeing or predicting higher rates. So there's more of the consensus is getting higher in the view that they may hike rates by the end of 2023. So that's again another bullish sign. If it went from 5 to 7, right? But if it went from maybe 5 to 2, then that would be negative, right? Because then there'd be less officials thinking that they were going to hike rates, but it's increased. The consensus is growing. Let's just continue on.
Indicators of economic activity and employment have turned up recently, although the sectors most adversely affected by the pandemic remain weak, the FOMC said in its statement. Inflation continues to run below 2%. Follow reaction in real time here on Bloomberg's Top Line blog. The Fed expects that a bump in inflation this year will be short-lived. Officials saw their preferred measure of price pressure slowing to 2% next year following a spike to 2.4% in 2021, according to the projections. Excluding food and energy, inflation is 4%.
Yeah, so just quickly, remember we always have a 2% target, yeah? So what they're saying is that, their preferred measure of price pressure slowing to 2% next year following a spike, yeah? So this would be after a 2.4% increase in inflation in 2021, so this year. So their expectation is for 2.4%, which would be above their inflation target of 2%, but then they expect inflation to kind of cool off to around 2%, yeah? Excluding food and energy, inflation is forecasted to hit 2.2% this year and 4 to 2% in 2022. But that again is all positive for the dollar. Yeah.
Cast to hit 2.2% this year and fall to 2% in 2022. 10-year Treasury yields remained near one-year highs after the statement, with stocks reversing losses. Asked about the move in yields, Powell noted that it was important conditions continue to remain accommodative and that he would be concerned by disorderly markets, repeating a line he used earlier this month. Massive fiscal support and widening vaccinations that will help reopen the economy have buoyed investor expectations for rate increases and inflation, propelling Treasury yields higher as the Fed and federal government keep adding stimulus.
That's good.
Wednesday's decision was unanimous. Asset purchases. U.S. central bankers left asset purchases unchanged at $120 billion a month and repeated that this pace would be maintained until substantial further progress is made on their employment and inflation goals. The target range of the benchmark federal funds rate was also kept at 0 to 0.25%, where it's been since last March. Powell and his colleagues met as the economy continues to improve. Job gains picked up last month and President Joe Biden signed an additional $1.9 trillion of pandemic aid into law on March 11th. Vaccinations continue apace, allowing states to start easing lockdown restrictions that could release a torrent of consumer spending.
That's positive.
The economy remains far from the Fed's goals, though. Even with 379,000 jobs added to payrolls in February, 9.5 million fewer Americans have jobs compared with a year ago, and inflation remains well below the Fed's 2% target. This particular downturn was a direct hit on the part of the economy that employs many minorities, Powell said. Still, prospects for stronger growth have ignited some concern about higher inflation, contributing to a rise in 10-year Treasury yields in recent weeks. Powell told lawmakers in testimony last month that the economy still has a long way to go before there's any risk of overheating. They also upgraded forecasts for economic growth and the labor market, with the median estimate for unemployment falling to 4.5% at the end of 2021 and 3.5% in 2023, while gross domestic product was seen expanding 6.5% this year, up from a prior projection of 4.2%. Christopher Waller, who joined the Board of Governors in late December, contributed projections for the first time this month.
So, after hearing that, was there anything that anyone could say was negative within this article? it sounds more positive than negative, right? You would agree? Yep. Sounds definitely more positive, definitely more growth, as we saw in the last paragraph. They also upgraded their forecast for economic growth in the labor market, with the median estimates for unemployment falling to 4.5 at the end of 2021 and 3.5 to 2023, while gross domestic product was seen expanding 6.5 this year, up from a prior projection of 4.2. Doesn't pretty much get more positive than that, right? Again, there are cautions, there are definitely concerns. Nothing is set in stone. But remember, this is a buy the rumor, sell the fact situation. And as long as the data still supports, this is the key thing. The data has to support the narrative. So as long as the data comes out and you start to see positive, you're still seeing positive GDP numbers, positive inflation numbers, yeah, you can just literally continue to buy the dollar. That's literally it. This is a trade idea that you can have for a very long time, and then you basically trade against a currency that maybe isn't doing so well. Yeah. So when we go back to the euro dollar, yeah, what do you think the smart money are doing? Anyone know what the smart money are doing? Do you think they're buying, or they're probably looking to buy the dollar at a? That's exactly it, Paul. That's exactly it. Because then you would go to the euro and say, well, what's so positive about the euro? I was watching, I was having dinner, I was watching the news, and Europe are threatening the UK to about trade, talking about the trade between the UK. They're going to disrupt it or do whatever, because if the UK don't give them more vaccines, for example, the Oxford AstraZeneca, right? So there's problems there in Europe. Their rollout is far behind everyone else. So for me, yeah, and also as well the EU UK Irish border as well. Exactly, there's problems there, right? But just in general, when it comes to the vaccine rollout, yeah, they're having problems. So for me, this is definitely not going to make me FOMO. 100%, it's not. If anything, I'm just looking for trades to the downside. So what I would probably look for, just to wrap this up, would be, can anyone see what kind of trade this may look to be? What kind of setup? What kind of setup would you see? Would you think that this is or could be? Stop hunt, yep. Maxwell's on it. Stop hunt. You're starting to see. Nice little level. Nice accurate level there as well. Just turn that to nice levels. Yeah, nice ranging market. Go in a bit more detail, you can start to see that area there. You had support, resistance, support. Yeah, let's drag that back as well. Nice support and resistance in and around there. So it is a level that has been used. It's been used there. All right, we've got a nice ranging market. Yeah, bounce off there. It's definitely not trending. Now, this is where the FOMO. This is going to be a very nice stop hunt if this happens. Yeah, if you start to see a breakout above that level there, and then it starts to come back inside, that for me is nice. Is very nice. So let's see what happens there. Also as well, it's best to check what bonds are doing. So bond yields, 10-year sold off a little bit, but it's coming back. So it's still at the highs. It's still at the 1.64. Doesn't look like it didn't sell off massively, right? Look at that. If you're looking at that from, the perspective of, any kind of pullback, that isn't really any kind of sign of a reversal. If it started really falling like this, then I'd be like, there's something there, right? There's maybe they're taking it negative. But we just read the article. Bond market are the smartest guys in the room. There's really no kind of sell-off, maybe some sort of profit taking or something, maybe just a bit of a deeper pullback. But overall, definitely doesn't justify, the euro dollar move. So for me, that I think would be a really nice manipulation up top for a short trade. And if that doesn't work out, then fine. There's going to be other levels up top around here that will be that I'll be looking to take as well.